Welcome to Drill Down Earnings. We have Q1 results from Mongodb, that big maker of databases, a tech company based in New York City. Go figure. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. Mongodb is probably best known as the maker of Atlas. It's a big cloud database service that helps developers build with data. So AWS, Amazon Web Services, Google Cloud, Microsoft Azure, they all use or can use. Users can use MongoDB on those services and do, but maybe not as much as they'd hoped. Q1 numbers, Wall Street just like to beat or miss, and they beat the numbers, but that doesn't mean it was a good quarter. It just means that the guidance was less than what they delivered. So first quarter results of $451 million, up 22%. That's a slowing cadence of growth. They're characterizing their customer growth as strong. I'm going to show you the actual numbers, and you can tell me if you think it was strong. Specifically, okay, so 22% revenue growth. That's not terrible, but it's not what this company that was putting up 40% numbers only a year ago is capable of. And you see the slowing growth. Specifically, their customer growth has declined with Atlas. Atlas growth at 15%, just not terrific for this business when it's their most important product. And their operating margins are getting worse. They stopped hiring during after COVID. They thought they could cut back on their staff and not add to their sales staff. I mean, their expenses as a percentage of revenues continue to go up. Their operating losses continue to mount, and the margins get worse. How did the stock react when all this happened? We found out what the numbers were. The stock tanked, down 24% in after-hours trading, and that's after only rising 6% in the calendar year, well behind the S&P 500. So what did the CEO have to say about this and his big decision to cut back on his sales staff going into a period now when we know that sales have kind of struggled, at least compared to their historic norm? Here is the CEO of Dev Ittycheria, who's an impressive guy, talking about what happened with the sales staff and how they think AI can help make up for the lack of sales people.
We did pause hiring last year, and so we want to make sure that we continue to grow our productive capacity consistently. We're going after a very large market. We have low share, but we also have to win business workload by workload, which is harder than more of a top-down centralized sale. And so what we're also doing is focusing on also increasing the productivity of those teams by getting better and more efficient at workload by workload, focusing on the higher end of the market, and also trying to sell more top-down using the whole focus around modernizing legacy applications, as well as AI, which obviously is getting a lot of senior level attention.
So what's it all mean? What's the drill down earnings takeaway? And the bite, one number that tells us a whole lot, will happen right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So why are MongoDB's shares tanking and aftermarket trading down 24%? Well, they just reported Q1 earnings, and here's the essential summary of what you need to know, the takeaway I want you to remember. $451 million in earnings, up 22% on a year-over-year basis, and that's not good for a company that used to grow at 40%. Maybe that's one of the reasons the stock is down. The guidance also not very strong, but I promised you to bite one number that means a whole lot, and that number is 15%. 15% of Atlas database customers. That number has been shrinking. The growth rate has been shrinking for a while now, and I think that's the real takeaway. When your most important product is growing even more slowly than the rest of the company, it's not a good thing, at least in terms of customer count. All right, thanks for listening to Drill Down Earnings. Check me out on all of the socials, and especially the YouTube page for the Futurum Group. Drill Down Earnings, part of 6.5 Media.